Hello, I'm Dr. Firoz Khan. I've done my degrees like PhD, NET. I'm a fellow member of Cost and Management Accountants. I've done also CS, MBA, MCOM. I'm also management SIR. Presently, I'm a director in Ascended Commerce Academy, Greater Noida. And this is all my details given in the slide. So today I'm going to talk about mastering fundamental analysis and conservative value investing. As you know, there are a number of videos in YouTube and many other channels. They are all good, but sometimes I believe uh, it is better to listen to also sometimes to formal faculty. As you have been listening to or watching lots of podcasts and videos, but let's sometimes. I'm a teacher. I'm a faculty. I've got almost close to 35 years of experience. I had worked in uh, PSUs for 12 years, and next for another, uh, 23 years of academic experience. So total, I've got close to 35 years of experience. So yes, fundamental analysis, as any of you have also studied, or you would have in your MBA classes or BBA classes. But let's understand how to make money utilizing the concepts, the theory which you have gone through in the classroom. But of course, Warren Buffett, the great investor, who has retired now, but his success mantra also discuss. But the conservative value investing is something like one stock you have identified. If it is undervalued, that definitely you should purchase it. Because supposing you have calculated the intrinsic value and that comes out say 100 INR, okay, and when you compare with the market price, suppose it is 80 INR. So in that case, your stock is undervalued. So presently it is being sold in the market at 80 rupees or 80 INR, but in the long run or in the future, the market is going to reflect the intrinsic value, that is the 100 rupees. Definitely it's undervalued, you should purchase. But quickly, how to deal with the stocks, and I will talk about the complex stocks, that is the small cap, because there are three kinds of stocks: large cap, mid cap, and small cap. In this video, I am going to talk about the complex part, that is the small cap, how you can make a lot of money utilizing some concepts of the investments which is connected to stock market. Okay, this is the flow. Like I would start with some drama, some storytelling, and I would also show you which kind of asset class, whether it's a gold or stock market investment, or even uh, real estate or bonds, etc. The standing of these kind of asset classes, which one is the better, which one is the best for me, and of course, I will talk about fundamental analysis, and I will also touch that conservative value investing, and I would also connect to success mantra of Warren Buffett. And one interesting note is these fundamentals are not so simple, So definitely you have to stretch your mind, and little bit understanding of statistics. It's going to definitely help you. And I am the person to connect the dots, and of course we'll conclude. Uh, to start with the simple word that is investing, because I know a lot of people have got a lot of confusion with regard to it, and this meaning of investing I have extracted some input from the book that is called Stocks to Riches by Parag Parikh. Okay, you can it's such a nice book that in a very simple understanding, simple jargons, you can understand the concepts. But let me instead of breaking the ice directly, let me take you to a drama. There is a discussion between four members in the family: father, mother, and son, and the daughter. So let's go through it, and then we'll understand what is investing. Okay. So it's a challenging game. Investing is a challenging game, and everybody is into this. And of course, having the good control or good command over it is definitely going to help. So let's go through that conversation between between a father, mother, and son. So, son, dad, give me some money. You also can read, but let me also, speak out. So, dad, give me some money. I want to invest in the stock market. All my college friends go to this broker who provides terminals where one can invest. Dad, invest? Son, yes. My friends make a lot of money. They buy stocks on the broker's advice, and when the prices rise, they sell and make clean profit. Dad, well, this is the age for you to study, get good grades so that you can get a good job. That will secure your future. I don't want you to get into speculating in stocks. When the daughter comes, Dad, you have to give me some extra money this month, as I need to buy some gold jewelry. I will be getting married in a couple of years, and I need to start building my jewelry collections now. Mother comes in. Baby, look at yourself in the mirror. You are putting on so much weight. If you want to look good wearing gold jewelry, you require a good body. Why don't you go to the gym for regular workouts instead of wasting your time watching TV? It is high time you should start watching your figure if you want to get a good husband and settle down in life. Daughter, oh mom, my boyfriend is a big investor. He buys and sells commodities. He knows how to make money. We have decided to get married. You need not worry about my future. Oh, so he's a commodity investor. Great, great, dad. I told you it's a great business. I want to be a stock investor. You don't understand what a big thing investing is. You can make a lot of money through it. See that you slog the whole day at your factory, become an investor, and you will become rich. Mother, children, your dad works so hard at his factory, which is why we have a comfortable life. It's wrong to run down your father. He chose to set up this factory. So what if he didn't get into investing? Then son and daughter. But we can make big money through investing. Why should dad work so hard at the factory when this is a better option? Mom. I don't want to get into this debate, but I'm happy to have inherited from my father some stocks and real estate property. I get my regular dividends from my stocks and the rent from the property. Why should I bother about investing, Dad? Well, I think I will go to sleep. I'm really confused about this. Investing is a difficult subject. Good night. Now, this is the question out of this learning, that who is a real investor. So definitely, you can also start thinking out of the four character. So who is the real investor? So, honestly speaking, there is no investor here. Even the mother appears to be, a kind of investor, because she has inherited some rental income, and also regular dividends she is also receiving, but she doesn't know. That's the point. So when you do not know you are an investor, and you tend to, kind of, uh, not clear, you are not clear exactly, then investment is also not that. Okay, so you can go through it, like, exactly, like, for example, I have purchased a house. I've taken a loan and I purchased a house. And supposing I purchased some 10 years back at 50 lakhs, and now the price of house has gone to 1.2, say. Is this an investment? So now this is another question I'm raising. So that's why you need to be very careful. What is investment? I believe the kind of example I cited, that I purchased a property at 50 lakhs and the price has gone to 1.1 or 1.2. This is not investment. I also said that I have taken a loan. Okay, so this is not investment. Okay, so perhaps investment means, as you can slowly understand, whether you are going to sell it. If you are not booking the profit, if you are not selling it, then I don't think whether it's a investment or not. Okay, so this is a question I'm leaving it to you, because a lot of thoughts comes, whether it's an investment or not investment. People may debate also on this, but I don't think that's an investment. Investment, I mean, you should be able to sell it, or you should sell it, and then you make money. Okay, and then you can manage also your money. So absolutely, out of the four characters, nobody is the investor. Okay, so what is investing? So you can understand it. It is complex. It is to be understood properly, and people invest in relationship. It may be marriage. It may be career. Like, it may be large family. It may be education. You invest in education. You invest in large families. land and crops, small families, health, charitable, even charitable works also can be one kind of investment nowadays, external assets like real estate. But anyway, let's understand the critical perspective. I'm basically going to take you to the data, but before that, I should break the ice, to understand, to make you understand, things should be, you know, proper, clear to everyone. So, like for example, if I say investment is very personal, what do you mean by that? So, like for example, if you ask me, I don't invest in PSU, but my students make a lot of money investing also in PSU. That's my style, That's my style. Why should I bother about my students, who are even making more money? So you understand now. It's very personal. So as you, like for example, attitude is something which doesn't look with the students, but when you are grown up like 50 and you develop an attitude, like I'm having an attitude here that I don't like to invest in PSUs, so that's a kind of personal thing I would like to mention. And a lot of people they don't like to talk about their portfolios, they don't like to talk about their investments. And I have also a lot of my faculty friends, so they teach being professors on economics, professors in finance. They have been talking very big thing, but they don't invest. And renting versus buying, I've already said, So it is better to like if you Google it out. 99.99 percentage of the literature says that it is always good to stay in a rented house than buying a house. Like somebody I saw in a YouTube video that he says ki Indians who are having a house are men of crore because once they sell the house, because they have acquired, purchased, they are all men of crore. But who are going to or who are ready to sell their house? So that's the question. And a lot of people have got a lot of income they generate, but in terms of asset creation or wealth creation, people have a lot of confusion and also they commit a lot of mistakes. Even I've seen chartered accountants. I'm a cost accountant company secretary. I've seen a lot of my friends. They are very good in accounting and understanding the data, uh, numbers, etc. But they are very poor in investment, like the professors I'm talking about. So even I've checked who are the people. I mean, they are doing great in stock market. I have seen that it is the engineers with some finance background. They are doing really excellence in the stock market. So that's what I'm asking. Money is controversial because of its low. Like, a lot of like the next is rich are corrupt. This is something people believe. The corrupts are. I mean, the rich people are corrupt. No, I don't. I tend to disagree. People are rich not just because they are all doing corrupt things. People are rich because of they have taken risk. People are rich because of they know how to uh, where they are investing. They know how to make money. Okay. Anyway, let's get into numbers now. Okay. So you have been investing in bonds, gold, real estate, PPF, mutual funds, etc. But here is the clear, your positions. Like for example, if you look at, I have categorized the investment in stock market, large cap, mid cap, and small cap. Large cap, like if you look at the theory, large cap are those stocks, those shares whose market capitalization, in totality, it exceeds $10 billion, and mid caps are 2 to 10, and small caps are below 2 billion. So as you can see here, nominal CAGR, nominal means here the inflation rate has not inflation is not adjusted, because what we expect from our investment is in inflation adjusted return. Try to understand what I'm saying. If whatever return you are getting, like nominal, that is not after adjusting the inflation rate, which is really killing your return. But here, when we say real means definitely you have adjusted, you have reduced your return by the inflation rate, and inflation rate we are assuming around 5 to 5.5% inflation. So while 12 percentage, 14 percentage, 15.5 percentage kind of, uh, so 12 percentage, 14 percentage, 15.5, these are before adjusting the inflation, but this 6.16, these are all return kind of, So these are after adjusting. But interesting thing is this, because we carry our investment lifelong, 10 years, 20 years, 30 years. So here this calculation is not about what exactly the return within 2 to 3. No, here I'm counting a long period, like after 10 years, after 20 years, after 30 years, after 40 years. So for example, gold, because everybody nowadays after gold, and very recently our Prime Minister has rightly said that, of course, there is a lot of hue and cry, but I believe gold is not at all a good investment. uh, if you look at how much return, inflation adjusted return, you are getting after 10 years, 1.45. That means 1 rupee, if you have invested 10 years before, that will become 1.45 after 10 years. Similarly, 1 rupee you have invested 20 years before, that will become 2.1 after 20 years, and so on. But look at the small cap, because here in this video, I'm going to talk about the uh, small cap, which is risky, but also if managed well, it can give you. Now look at the small cap. After 10 years, 1 rupee it will become say 2.47, and 20 years it will become 1 rupee will become 6.12. I'm talking about inflation adjusted after adjusting 5.5. And next is 30 years after, it will become 1 rupee, it will become 15 rupees. Similarly, 37.43 after 40 years. So small caps is giving the maximum return, whereas even look at the real estate. Real estate is very low, even lesser than your gold. Okay, though we have been saying that our property has gone value like from 50 lakhs to 1 crore, etc., etc. Even gold also can has gone like this. But look at the return after 30, because we have been carrying these assets generation to generation. Father gave the assets or investments products to son or children. Then they have been carrying also. So let us count the real return, not nominal kind of things. Anyway, we have to go milestone. Let me quickly identify one small cap and help you understand how you can make money. Now, this is a company, Radiant. It's a basically small cap company, and I have taken the data on 8th May, which is very recent, from moneycontrol.com. And there are so many things, but let's not waste time. I want to focus on this EPS, P ratio, price to book ratios, and say, industry P ratio. So, for example, EPS, you understand the profit per share, profit after tax per share. The TTM means your trailing 12 months. Even TTMP means price earning. Price earning means price is the numerator and earning profit is the denominator. So supposing 12.18, the company's TTMP is 12.18. It is showing low. Don't go by that. Just apply your common sense. I'll guide you. Don't worry. Just given P ratio 12.18 means, because numerator is the market price and denominator is the earning per share. So when the result comes out 12.18, the meaning is for every 1 unit of profit the company earns, market market is ready to pay 12 times. Similarly, price to book value, that means 1.74 means one is the book value, that is the asset value, net asset value, and price is as usual, price is the numerator. So for 1 unit of asset value, the market is going to pay say 1.74 times. And similarly, the sector means kind of industry P. So it is giving almost it's not so that visible, but let's say 22. So TTMP is, remember these numbers because I'm going to explain next in the slide how you are going to interpret, and catch that conservative and the value investment. So be careful. So here TTMP of the stock, so that is 12.18, and sector P is 22 around 21.7579. So let's make it 22. And price to book value is very less, 1.74. Okay, next go to the slide. Let's understand P ratio. As I said, the formula is market price per share divided by earning per share. So this is denominator and this is your numerator. So market price is the numerator and earning per share is the denominator. So when I am saying 10, so surely you can understand, for 1 rupee of proper for 1 unit of profit, X Limited has got a market impact, or people are ready to pay 10 times. Whereas if it's a Y Limited, it can be anything like leader. When I said leader of the company means maybe the P ratio would be very high. Like for example, Apple, if you look at the P ratio would be more than 150 or something like that, very high. uh, Industry average is the most conservative, because you understand, like here there are maybe 200, 300 companies when I'm talking about the industry, and then P ratio average has been taken out, and then when it is 25, so you can say it's a very conservative. But most conservative is the market P, as you can see in the market there would be high number of, I mean maximum number of like 7,000, 8,000 company, or say close to 10,000 companies in say Nifty. So when you calculate the P ratio of every company and then make the average, so when it comes out 20, definitely this 20 should be lower than the industry, because in the industry, when it is all about only 200 companies, while in the market there are 10,000 companies, so generally the region like P ratio would be lower in case of a market, while in case of industry, it would be slightly higher. But the leader would be always leader. So so let me ask you here, where would you like to make investment? Now this is a big question. So let's not get into what an investor would do. Rather try to understand the investor, because I believe every stock is different, every investor is also different. So that's why you need to be very, very careful. If you are, suppose that you know young people like just got a job, and you have no family at this point of time, you would like to invest in Wild Limited. But if you ask me, my age is what 50, my age is 59. So I would like to invest in X Limited. Why? Now, because there is a Y Limited example, that there is a Y Limited, uh, it has gone to 100, so this company can also go to 100. But comparing with the leader is not good. Let me compare with the industry average, because this is the most conservative approach. But again, if I look at also the market, still my X Limited P ratio is lower. At least I can agree that this X Limited can achieve 20 or even 25. But I also don't digest this fact that this 10 would become 100. Let us compare this example with a real life. You have a son, you have a brother, and this brother is to take, your brother is to take admission in a school, and you have gone to meet principal with your brother, and the principal says there are two sections, one section A and section B. So section A has got average marks, say 85, and section B has got average marks as 70. And your brother, he scores or secures around 60 percentage. So again I repeat, the section A has got a 85% average, and section B has got a 75% average. So which section you would like your brother to take admission? So I believe you would be definitely guided with that. That's called power of average. So you understand your brother generally scores 60 percentage, but because of section A has got a average marks 85, so you would always jump to that, asking, or I mean requesting the principal to take your brother in section A. So that is what here also the same thinking. X Limited is the average company at this point of time. Okay, that's why the 10 is the P ratio. But at least if I don't agree with 100, at least I can agree that 10 can reach to 25, or it can reach to also 20. Like your brother, you are thinking that your brother would score, uh, 85, though you know that your brother generally scores 60% marks, but you start thinking that, your brother can also scores 85. So that is the kind of simple funda connected. Okay, so yes, so P ratio, when I'm talking about that company, okay, so Radiant CMS, we discussed that, when you looked at their number, we understood that the industry P was 22, and Radiant CMS, the P ratio was lower. So definitely this company's P ratio can also improve to at least the industry P. So that's a undervalued company. And here the conservative thing I can talk about, because I already said, yeah, at least 10 can become 20. 10 can become 20, which is the P ratio of the market. Okay, so it is the most conservative. Like, for example, you would have experience also when you took admission in an MBA college. The admission people would have shown you the highest salary, average salary, and 99% students, they look at the average salary, because they believe, if nothing could be achieved like the highest salary, at least that average salary I can score. I can crack. So that's what the same thinking here. X Limited, it is 10, but it can definitely at least go to 20. So that means the stock is appears to be undervalued. So besides, we are going to talk about also some other parameters. If those parameters are good, so definitely you can conclude yes, it's undervalued stock. And yes, now look at this. I'm trying to get into that same company, Radiant CMS. Now the price is 44.83. You can see at 44.83, and what people have been talking about is almost good. Everybody is talking about you should buy. Next is this is the main crux of this video, that conservative approach I talked about, Warren Buffett style also I talked about. So if a simple, what is fundamental analysis? If a company generally starts with a loan, if the company has taken loan, the company would like to invest in assets. And if you are investing in assets, definitely it would further lead to increase in the revenue. And when it when revenue increases, then profit will also increase. Similarly, dividend will also increase. And also, it is basically the theory also, when the company has been giving the dividend. So dividend is the return on the investment on shares. The company, after earning profit, pays dividend. But there are also many companies that don't pay dividend. But I'm talking about a very generic company, and Indian type of company where people expect also something in terms of dividend. Now, when the dividend is increasing, the theory says the price is also going to increase. Of course, there is also contradictory theory, because I'm a faculty here, so I can also tell you both sides of the coin. So, because when I said dividend, when the company is paying dividend, the price will also increase. Even there are also contradictory theory ki dividend payment is not going to impact the market price. So this is the kind of trend. Everything, like when the loan is increasing, assets should increase. When the asset is increasing, the revenue should increase. When the revenue is increasing, the profit. Similarly, the dividend will increase and the stock price will also increase. Very simple. This is crux of the fundamental. Unlike the technical where you go by simply the trends of the pricing. Now look at further details of this company. That is the Radiant, the same company, Radiant Cash System. Price is around close to 45. Now this is, I'm talking about annual, and it is I think this is 3 years old IPO. So the look at the revenue part. Revenue, you can see the revenue is increasing. So you should be happy that over 3 years the revenue is increasing. Similarly, the profit, forgetting the first year, now almost it is stable around. It's good. If not, I don't say it is declining, or it is not declining. It is increasing. Similarly, earning per share is also good to watch. So it is increasing. Similarly, book value per share, because I said if the book value increasing, if the asset value increasing, so definitely revenue should also increase. So is that the book value increasing? Yes, because the book value is also of this company increasing. And next is ROE. Yes, it is slightly declining. It's okay. Like it's a company. It's a small cap company. So some kind of deviations also you have to bear it. So it is not like exactly the northward trend, but of course it is good. Okay. Next is, I'm now talking about the quarterly. Look at the quarterly way. So quarterly revenue is also quite good. Okay, everybody should be happy. Similarly, the net profit also, look at this. You should not be definitely you should be happy also. Okay, 9.54 then 9.68, then slowly it is increasing. Similarly, earning per share also it is increasing 0.89, 0. So quarterly it is, so it is increasing. So more or less this company appears good. Now, before I end, I must tell you also, because this is the recent phenomena. There are people also look at a lot of companies to invest where the FII investing. Now you can think about, because currently because of the the war between US and Iran and Israel, kind of things are going on. So there has been outflux of FII money from India. So look at this. Most of, because I invest in financial services, but I'm not worried. I'm not worried because of, I know okay, every stock is different. As I said already, every stock is different. So yes, this is. But there are also some sectors where FIA also in doing the investment, like power, capital goods, metal, mining, so it's a plus. While you can see this area where the money is going out. So you can be scared, but I'm not scared because I know these are macro variables. These are going to affect the company, no doubt. But at the same time, whenever you are going to purchase the stock, it is always the spot and the kind of data, like I said, P ratio, PB ratio, okay. So PB ratio, price to book value, is also similar. because time is, I'm taking a lot of time now, so I'm trying to make it close it now. So price to book value is also like in this company case we discussed that it was 1.75 around. Generally, we believe 1.5. 1.5 is the criteria, average criteria, but it is 1.75. Still, it is compared to peer, it is undervalued. Last but not the least, as I said, every stock is different and every investor is different. There is a lot of difference between markets. So, market intelligence, yeah, these are all good. Like everybody makes money in the long run. So these are good for the academics, but not for the people like investors. Like to me, these are theoretical things. But uh, when you actually go to spend the money or invest the money, you have to look at all these fundamentals. Then the things are more clear. Otherwise, you would be always telling only these kind of things in the four walls of the classroom, and that's not going to help. So better you start investing. Some making maybe you can start with 3 4 thousand rupees, and then learn the entire things, and then you can go for investing more. Fundamental analysis. So please avoid technical analysis like even investment in derivatives. Our government and also SEBI has come with a report that students have been uh, burning a lot of cash. They do not know how to manage the money in future options. So I discourage technical. I discourage people are making money, but let us understand the kind of Warren Buffett invest. He also doesn't like the technical analysis, and also he tells the derivatives are future options. Derivatives are like weapons of mass destruction. It will not only kill that person but also the economy of the country. So of course, initially uh, you have to face loss. When you are learning, so you need to burn your finger a little bit. Then only you can have a good control over the stock and the cooking, like in the example I cited. I'm not a intraday. Let's let me clear. I'm a trader. I purchase stocks and keep it. Whenever the price, I saw the profit, I book it, and never I get committed to any stock. The moment the P ratio has come to near to that industry average or market average, I sell it. So till it has not touched that industry average or market average, I'm talking about P and PB ratios. If the my stocks have not touched that or not close or significantly lower than the industry average or market average, I'm okay to continue with that stock and book the profit every day also. But I don't do the intraday. I purchase because I know its price would rise because the P ratio is less, PB ratio is less. So I'm not a trader, but I need not to be also called an investor, because investor means these are theoretical. Because when you actually do the practical, you will understand that there is a big difference between what you have been listening in the classroom vis-a-vis when you start, actually investing. Listening to economics or experts is good, but do your homework. Even don't trust me also, because I have got a temperament which suits me. So develop your gut feeling, develop your kind of temperament, your attitude, and in a stock market, in the stock market investment, if you develop an attitude, that is good. But when you are just a student and you are developing the attitude, that is not a good thing. No, but in an investment or when you are running a business, you have got a temperament that is respected. That is always welcome. So thank you very much. I think I've taken a lot of time. It's almost okay, quite a good time, but it's a worth. Perhaps it is going to help you. Thank you very much.